April 8th, 2025. I'll probably be mentioning this for the next few weeks, but there is a 3-bar micro channel Discord in the members area. There's the link to it. So if you're interested in talking about the 3-bar micro channel, there's a link to it in the members area. Anyways, the day started out with a gap up. I thought that it was likely that we would get above the bar 10 high from yesterday because 9 and 10 were such large bars that even the bull, there's some time frame where bar 10 is the very high tick of bar 10 is a bull bar closing on its high. You have to understand that. So it could be the 2 minute, the 3 minute, the 1 minute, the 1.5 minute, whatever it is, it doesn't matter. There's some time frame where there's a bull who bought the high close or the high tick of bar 10 and they scaled in. And those traders should be able to get out of their trade because buying the close of 9 or the high tick of 10 was a reasonable thing to do if you're willing to scale in. So the traders who bought and were willing to scale in, they should be relieved. So I thought it was likely that we would get to at least the bar 10 high. We had consecutive bear bars on the open. The bar 10 high was here. Consecutive bear bars on the open. Might get some sort of small second leg, but the first thing that might have needed a second leg was bars 5, 6, and 7. We do reach that high. So if you're buying here, we're starting with an outside bar, which is a trading range bar. So most likely a little bit more sideways. You're also, there's tails, right? So it's really not as good as it could be, and we're around resistance. I've noticed a lot. I haven't studied it quite enough yet, but I've noticed a lot that when you get a pause, especially a late pause, and then you get an attempt to rally above the high of the pause. So bar 9 is the pause, and 10 trying to become a bull bar closing near its high, but instead sells off and becomes disappointing. This is often the start of the pullback. So bar 10 often leads to a pullback. So some traders might be willing to sell 10, basically betting on the swing trade. Or you could wait for 11 and sell below 11. But I've just noticed a lot when you get the 3-bar micro channel and then a pause bar and a disappointing follow through bar like 10. A lot of times the market starts to pull back. 15 is when we're always in short, and 15 is going to get a second leg. So it's reasonable to sell the close of 15. I ended up selling the close of 17. 13 for me is the breakout point. So 16 and 17 are consecutive closes below the breakout point. 15, 16, and 17 are 3 consecutive closes below the breakout point. For me, the more closes we get below the breakout point, the better that it is. So when I see a 3-bar micro channel, I like to see at least 2 closes above the breakout point. 1 is the breakout point, so 6 and 7 did close above the breakout point, but there were other issues with that trade. But I find that the really strong 3-bar micro channels get consecutive closes above or below their breakout points. So you go to the left, you find yourself a breakout point. It's a little bit dependent on how you want to do it, but 17 is the 1 close above the 13 high. 27, 1 close above the 23 high. For here, I used probably the 33 high, so 36 and 37. And then 45. Hold on a second. Anyways, here, 65 and 66 closes below the 60 low. So for me, I think odds are once I see 15, 16, and 17 that we're going lower. I sold the close. I took 2 trades today. I sold the close of 17 and I sold more on the close of 19. I exited half below the 22 low and then I exited the rest above bar 26. I also sold the 37 low during 40. I thought it might be a late leg, so I was kind of more interested in selling the pullback, and then I exited that above 43, which I thought was fine. It's also okay to stay short with 43, but sometimes 44 will be a big bull bar there. So I just got out. But it's also okay to say sometimes 44 would be a big bull bar, and when it's not a big bull bar, then you can get back in and short the close of 44. So whenever you're exiting a trade, it's good to think about why am I exiting this trade? What is this trade doing that is making me? We moved a lot today. How long is this? 6.5%. That's a lot. It's good to think, why am I exiting this trade? If you're exiting above 43, you're thinking, okay, it's because 44 could be another big bull bar. And if it's not, you can get back in. And that's kind of how always in trading works. But those were the only 2 trades I took today. Once I got 50 and 51, I was personally unwilling to sell. I thought we would start to go sideways, but we ended up getting a vacuum test of 5,000. So the sell-off down to 18, 4-bar micro channel for those of you who trade that. Good looking measured move down. You can see. 20 and 21, leg 2. We got to break out below the 2 low. So 20, 21. And then a second leg down, 23, 24. But you could argue this whole thing is 3 legs down. However, it's a really tight channel, right? So we have 3 larger legs down. 1, pullback, 2, pullback 3, and now we're getting a fourth leg, a breakout attempt below the bear channel. If we're getting a breakout below a bear channel, what are the odds of that being successful? About 25%, according to Al's books in general. So this sell-off that's going right now is probably a bit climactic. I mean, the whole day is climactic at the bear trend day, but that particular move is probably climactic. The rally to 27 is against a tight channel and not very strong closes. So it is a 3-bar micro channel, but I sat out of that one. I did not think it was very good against the tight channel. And I thought odds were we went a little more sideways, and a bar like 28 confirms that. So it ends up just being 2 legs up and then reversal down 32, 33. You could sell the close 32, 33, 34. I think it's okay. 34 is a reasonable trade, but I don't take 3-bar micro channels that do not have micro gaps in them. So I'm only taking the trades with micro gaps because they're higher probability. I've been looking at that a lot. And the 3-bar micro channels without micro gaps have, close to a 30%, like a 31, 32% chance of a full loss. And the ones with micro gaps, it's more like 15%. So I prefer to just take the ones that have micro gaps and do that. 28, 29, 33, 34, like I said, okay to sell the closes. 36 is a good looking reversal up. It is against a 4-bar bear micro channel, so it's okay to stay short, but I thought 36 was a pretty good looking reversal, and I was surprised that it trapped traders 37, 38, 39. 39 does look like a late leg, but if you're suspicious that it could be a bear trend day, the late leg doesn't really matter. You can just sell and hold, right? So you can sit there through all the late legs and just wait for the bulls to get follow through. And if you did that, you probably wouldn't have been out until like 50, 51. But we ended up selling off all the way down to the 49 low and then a reversal up 50, 51. You can see you can reset the count 39 because it's breakout below this. Breakout, follow through, retest of the channel line, and then leg 2, pullback leg 3, pullback leg 4. So 4 legs down. 50, 51 should get at least another leg up. It was reasonable to buy the close of 51 because these are really strong bull bars. Odds were we were going to start to go sideways. However, this 3-legged pullback, 1, pullback 2, pullback 3, is stronger than a lot of the bulls would like, but they did a reasonable thing, and therefore they were let out at break even. So I think odds are we rally a little bit here and close the day right around 5,000. Market, I've been saying for months that we were going to go back to 5,000. Obviously, as I mentioned earlier, I can't predict tariffs, but we were primed for a move down. It was like maybe it was a little bit faster because of the economy and stuff, but in general, the price action is going to be reliable, and odds were we were going to get some sort of move down. So this, the bulls are hoping 1, pullback 2, pullback 3 in reversal. The bears see a big bear trend, so they're selling closes all the way down. 15 is probably the best swing trade of the day. Obviously, this is a good swing trade. Generally, looking for the bulls to get us where they need a second leg and letting them complete their price structure and get that second leg is the good areas to enter on bear trend days. The daily chart. That's not what I wanted. So the daily chart, obviously we're getting a failed breakout or a failed reversal. So spike, pullback, maybe channel. How much lower do we go? I don't know. I don't think that it's really, I'm sorry, I just got a message on, just give me a second. Okay, so how much lower do we go? Well, we should go at least below this low. Odds are we go below the 4.7 low, maybe tomorrow, but I think that is probably going to start to go a little more sideways. Again, I don't think that we're just going to lose, 30% in 10 days. That would be pretty unusual. The weekly chart, we have it's looking like 3 consecutive bear weeks. Still think we would probably get a bull close on the week, some sort of pause. This sort of setup, consecutive bear bars closing near their lows, does usually get a pullback. I don't remember the exact stat of the breakout and follow through, how often it gets us a immediate pullback. I think it's like 60-something% of the time. So I believe odds are that this is a bull close. The monthly chart's going to be interesting though. This is the biggest bear month in a while, 1,000-point bear month. It's the biggest one since COVID. We got a giant bear month, and obviously it got bought up and reversed. But if this bar, let's say, we have a lot of time left in this month, and this bar is already really large. If the bears can hold strong and keep the bar down here, then odds are, I don't know if we go down here, maybe we do. But if this bar gets bought up into this area, maybe around the moving average, then it should still get a second leg, but we might go a little bit higher first. All right, that is going to be it for this review.